Gold is an asset that thrives in uncertainty, recently hitting 3-month highs as investors seek shelter in an environment focused on the global growth outlook, especially in China and the weak US dollar. But can gold keep up these gains? And what other factors could push the shiny commodity out of favour again? Well, to discuss this, I'm joined by the CEO of the Gold and Silver Club, Nick Kelsey. Nick, thank you for coming in. Really do appreciate it. So gold, it's enjoying a bit of a resurgence right now.
It is, yeah. Gold is having a good time at the moment. There's a number of factors which are driving gold prices currently. If we look at the stock market, for example, that's actually a good reason which is driving markets up. So
what in particular, though?
Let's look at China, for example. So what's recently been happening in China? There's been a huge sell-off. It's probably been one of the worst stock market starts in over 2 decades. There's been about $8 trillion been wiped off global stock market. So there's been a dash for a safe haven, and money's been flowing into gold. So that's been driving gold up.
So China, what about US interest rates then?
Yes. With America, it's a very interesting picture. So at the end of 2015, the Fed, they committed to raising interest rates, and with the shaky start that we've seen so far in the last couple of weeks in January, it looks like the Fed are actually backtracking. So there's a lot of speculation that the Fed, they may not raise interest rates 3 or 4 times like they suggested. So potentially, if they do hold off, then that's just going to create a bullish scenario for gold.
So it's in gold's favour?
Right now, things are working in gold's favour.
Okay. What might happen to go the other way then? Because gold had a bad time of it prior to this.
Yeah, definitely.
3 consecutive years of losses. What could make that happen again then? Interest rates?
Yeah, sure. Yeah, interest rates is interest rates definitely. So if we look at the Fed, let's say for example, a lot of the data that's been coming out of the States, it's been missing expectations. So GDP's missed expectations. We've seen manufacturing data, that's missed expectations. And even in terms of last Friday jobs report, even though unemployment came at an 8-year low, the actual print, it actually missed. So it came out at 151 compared to 190 expected. So the picture's not really clear in the global markets. It's uncertain. So that's creating a lot of nervousness in the markets, and obviously investors right now with what's happening generally with the sell-off in the equity markets, there's a lot of speculation they're moving back into a bear market, with China devaluing their currency aggressively, other central banks around the world rolling out aggressive monetary policy. It just makes gold a safe place to be.
Yeah, but that's what I want to ask actually, because I understand why people are flocking towards gold, but what are they going to gain out of it? Are they actually going to gain profit out of gold, or is it just somewhere where you park your money for a rainy day? What benefits are there?
So in terms of obviously the global, I guess the global activities we're seeing right now, that's a safe haven buy. And then there's other reasons as well. So if we look at gold's seasonal cycle, for example, January has been the build-up to the Chinese New Year, which was actually just started right now.
Year of the monkey.
Year of the monkey. So normally what you see going back over the last 32 years, January is a very bullish year just based on seasonality for gold prices. So leading up to the Chinese New Year, you'll find a lot of buying from China into the Chinese New Year, because gold, it has a special meaning in China, so it's given as gifts. So you get a lot of buying, and if we look at in terms of buying activity from China, it's actually increased by 12%. So it's there's been a lot of buying, and then even if you look at the commodity futures reports, if you look at some of the buying activity from some of the hedge funds and some of the money managers, they've actually increased bullish bets by 35% in January. So there seems to be, there's just generally been the market cycles, the seasonal patterns, and also what's been happening in the markets, which has really created a positive picture for gold.
Projection time?
Yeah.
What's going to happen to gold? I want some numbers.
Sure. If we look at gold seasonal cycle, for example, as we move into spring, you typically find gold consolidates, it pulls back. So that's been coined with the famous term "sell in May and go away." So I do expect to see a pullback in gold prices. Right now they're currently trading at 3-month highs, 1174. I'll probably expect gold prices maybe to fall back towards 1150, 1130, that kind of range. As we move into autumn, in India it's the festival season, so gold buying increases once again, so that should be a bullish period. And then as we move towards the end of the year, there'll be profit taking, so I would expect gold prices to fall or consolidate during that period. So based on seasonal patterns, right now is bullish. Then I would expect the markets to consolidate going into Q2, Q3, and then we'll see a small spike towards the end of the year.
All right, Nick Kelsey, thank you very much indeed. So, gold is the place to be. The safe haven is back in focus, back in popularity. All right, thank you very much indeed. That's Nick Kelsey from the Gold and Silver Club. Thank you so much for coming in.